Yeah, testing 1, 2, 3. Right, you wanted to go over
breaks and
holds and
yeah.
breaks and holds. Okay. So every range has a hold level and a break level.
Oh.
So first of all, you've got to find a range,
Mm-hmm.
and a range is going to be anything more than 2 candles going in the same direction.
Mm-hmm.
If you ever find 2s and 2s next to each other, then it's really, really easy to work with. But this kind of thing here, these are accumulation ranges.
Mm-hmm.
So you've got 2 accumulation, a distribution, 2 accumulation, a distribution. So that's ranging. Okay, that's the price ranging. Now every single range will have a break level, which is going to be either the absolute bottom of the 2 accumulations, and it will have some kind of hold level, which in this case is actually under there, which didn't hold, which is why the price kept going up. Or that one on the other side of the range, which didn't hold, which is why the price kept going up. So I'll just put the break levels on first. So just go, that's our break.
So the hold is just the very top of the range?
No, this one here, the hold level is actually all the way up here because it's a different time frame range.
Mm-hmm.
So that was what stopped the price there. But down in here, the trend was reversing down in here. So the hold levels are actually already destroyed. Like that candle just goes straight through that hold level, which is what creates a range trend, which is that. If it had had 2 candles, you'd have to go down and find out at what time frame there was more than 1 candle in here. But okay, so break levels. There's a hold level. There's a hold level.
So the hold level is the bottom of the top candle. Is that it?
Yep.
Oh,
yep.
okay,
But
okay.
it can happen the other way around too. So this is just these are accumulation holds. There's one in here at a lower time frame.
Gotcha.
Somewhere up around there. And that's one. Yeah. 1, 2. Hold. And of course, when price is going the other way, a hold level would be 2 candle range. Oh yeah, that's close enough. That'd be a hold level there. Inside that candle. This is what it's designed to. Yeah. Because this is a different time frame, but somewhere in here there's a 2 candle range, and that is the distribution before the price goes up, and then that's designed to try and stop price from hitting the break level. So a hold level's purpose is basically to stop the price getting to the break level, because if the price gets to the break level, it can break out of the range potentially. So that is a hold level. And to figure out all these other ones, you'd have to figure out what time frame they're actually on. So I'll just stick with these for the meantime. Okay, now that's a break level. Okay, very similar to that break level, but there's actually a slightly different one in here. Mm-hmm. So that's the highest of the 2 distribution candles now, because the price has started to move the other way. Mm-hmm. And that's the break level up there, which got really close to, but not quite. And of course, don't forget that hold level in there. Okay. So there's 2 different outcomes when you hit a break level. They can either reverse trend which in turn makes them into a support level. So, for example, if you just chuck a trend line on like that, when this break level of this range here was hit here, it went through the trend, it hard closed the trend, and off it went. When it comes back to that price level later, there'll be a scalp, like a long in there, which is why it bounced off there. Or the other option is that they hit a break level and they break the range, which is pretty much what happened down here. So went underneath, didn't hard closed it, and got back into it because of older stuff. Like there's stuff all the way over here that sent it back up. But if this hadn't have been over here to send the price back up, then that would have been a much bigger fall. Okay, so that's break levels. They're either going to get hit, break, or they're going to get hit and form some kind of support for the future. And sometimes that can be, one candle later. It can be days later, like in this case, it was. What was that? 18th of March. Long came in on the 29th of March. So that's holds and breaks. Now, the significance of holds is once a hold level is hit, it creates, if the candle closes the same color, so I'll give you an example of that, like this hold level here, this candle was the one that closed in accumulation into that hold level. So that creates a range. Right, so this is the top part of the range, and it's quite flat, and you can see the next candle hit it and rejected, so that's normal. The first touch of pretty much any newly created range trend will either give you a long or a short, depending on where the actual whether it's on the top or the bottom. But that's basically if you were trading these days, you would be back here. You've got your 2 candle range, you've got your hold level, you've got this hold level at the bottom. So that's going to try and hold it at the bottom, and that's going to try and hold it at the top. And that's why ranges sometimes just get tighter and tighter and tighter and tighter until one side breaks, because effectively these are always going to be getting closer together, just by design. So we bounce off our hold level. So that's a trade in itself. If you just wanted to take that trade, you trade from here to here to the 1618. So that's 126 up to 130. So you've got one trade that day, and now you're waiting. Okay, you've hit the break level. So there's another trade in the break level, which is this trade. So you hit the break level, you long the break level back to the trend. So there's your next trade for that day. And now here's another trade. So you've gone up here, you've closed accumulation into the accumulation of the hold level. So that creates a range trend. So that's this there. So now you short the range trend and you short it back to the hold level. And there's your next trade. And this creates a lower time frame range, right? Because you only got 1, 1, 1. So you're no longer actually dealing with dailies. So time frames are breaking down. If you start to see time frames breaking down, you're probably going to collapse or fall somewhere in the future if they're breaking down. If they're winding up, they're getting stronger. If they're breaking down, they're getting weaker. So this is breaking down. So let's have a look and see what our 12 hours doing. And so you got 2 candle range on the 12 hour there. You could have actually just, you were working on a daily time frame and that worked. You could have taken that as well, which because this range here existed on both time frames, so you could have taken that and taken it back to the break of the range there, because you typically get a retrace to a break of range. So that's another trade there to there, or to the hold level on the daily. Either one worked. And you've re-entered this candle and you've closed blue. So you've now got a 12-hour range trend, which is from the bottom of that blue one to the blue one that closed inside that. So it's not actually technically, it's not really a 12-hour because you've got 3 candles in there, but it's something else. So you got to be a little bit careful about doing these properly. It's not that you won't get along, it's just that you don't know where your target is. And if it loses the trend, you don't know where your retest is. So because it's not quite right, so you might end up, getting screwed over. But yeah, so in that case, it's
So is it strictly 2 candles?
no, but it's just easier when you're learning
Okay.
to just do 2. It's stuff like this, like this was going to give you a long, right? But you just don't know where your target is exactly, because that's 3. So you don't know where your hold level actually is. And that's so we created a trend, we bounced off the trend, we got along. We just didn't really know where to take a TP. Yeah, keep going up, so that's not so bad. So and you see how it holds that range trend.
Yeah.
So if you get a 12-hour close under that trend anywhere in the future, it's a direct representation of this level down here. So that means it could be all the way up here, lose it, and go there. So that's unless it builds a capable range of being able to create a new trend, which it has. Like there's one in there, so it could build something off that in the future. Let's just see how that goes. Yep, up she goes. 144. See what happens when we lose it. There you go. Down we go. See? All the way back down to here. So if you lose a range trend, you basically lose that range. So this. Oh, that's close. Did that create one? And you got to be pretty exact with these things because, like, they are little pricks when it comes to where they finish pricing. Like that didn't actually enter the body of that candle, so you could be fooled into thinking that was the range trend because it's pretty damn close, but it's not. So in this case, the range trend is that one, which means you can long that trend when it closes. And as you can see, you got your long. Right, so range trend created on the close of that candle because it's the first blue candle to be within that body, and by within I mean lower than the top. So and it finished lower. It's also an indication that the whole trend is actually starting to turn down. Dangerous long to take because you're longing a downtrend, but it's got a pretty defined target, which is the backside of that range there. So that's your front side, back side of the range. So it's so you long that, you take it back up to there. That might have just been your trade that day. It's only $4, but $4 at whatever leverage, and you'll be making money.
So wait, was that line a regular support resistance or was it a hold or a break?
So that's a hold level on the bottom. It's a 3 candle range, so it's sort of a bit not quite as accurate as a 2, and then you got your 2 candle range in there, and then this falls into it. This is the closing candle, which closes inside. So you go from your hold level to your closing candle there. It doesn't apply if this is yellow. It only applies if it's blue. Yeah, we're getting a retrace. Yay. So that there, you then long this, up it goes. And then it rejects off the back side of that range there. So that's here. So it's now basically just stuck between the back side of this range and that trend until one gives up. It's either going to have to break up or break down. But in the meantime, you can pretty much just, anytime it touches the trend, you can take a long. Anytime it hits the back of that range, you can DP. Pretty easy few days those days. and then it goes up and hits the hold level in there. So at this point, you're now sort of looking to see if it can get up into here. You've also down in here hit the break level of this range, which was there. So you'd sort of expected either to close over top of that and then move up, or to reject down off it, same as any other break level. Right in there. Yeah, one for. That didn't go so well for it, did it? Went back up and hit that damn range trend again, and off it went. So this is kind of the difference between normal trends and range trends. Range trends are always representing a range, which gives you that rejection, and down it goes. So now we have hit the break of that one. Powered through it. And whatever that is on a higher time frame. Now it's hit the break of that, and hasn't hit that yet, but yeah. And so there's the retest of the backside of that range. So this candle doesn't break out of that range. This one does. And then after that one's closed, it goes back up to retest the back of the range that it's just broken out of. So that's your get out of jail card, really. Which is why longing a downtrend is not the wisest thing to do, because you're longing something that's going down, which means when you get out of jail card for your trade, your get out of jail card could be lower down than your entry. So yes, you can long these trends that are facing down, but just be prepared that if you lose it, you just have to suck it up, take the loss here, because there's no guarantee that gets back in. Like it might, but it could also just keep going down. Back down to whatever hold level was in there at some lower time frame. Yeah, there you go. So it went back down to your hold level there. That created a long.
Oh yeah.
That was the TP long.
Where do we set our fibs to determine our take profits? Like, which candle do we use?
Okay, so say this area here. What you're looking for is it's all going to start with some kind of engulfed candle like that, and then you put your fib on it like that. So body 1, wick 0, and then if you want to play it really safe, you wait until you get a range created and a close above, which is there. So that's playing it quite safe, because now you know you've got a whole bunch of engulfed ranges at various different time frames down inside this candle, and prices escalated up and created a higher time frame ranging and hard closed that even. And so that's a fairly safe means. So now when the price re-enters this area down here, you would take the trade back to from 118 up to 121, from the 1 to the 1618. And it might go higher, but you just play it safe. You'd want to be conscious of things like that as well. That's a range trend created down here, so the price is holding that. So how it approaches is quite relevant. You kind of want it to approach quite quickly. You don't want it to break this trend, because if it breaks that trend, it would just keep traveling down and not back up to your target. But that should play out. That's a clear, defined, broken range. And there's your range trend. Now it's kind of okay because it can get back up to your target without hitting the backside of that trend. And it probably will go back up to the backside of the trend as well. High chance of that. So you got a couple of things now that sort of allow you to jump into that long at the 1 or below there, and that's your TP. Which is also the hold level of this. So it's just come up through the hold level candle, hit your TP. Now it's rejected blue, which means it hasn't created a range trend. So as it stands, that can't get out of that range. So it needs a yellow candle up inside there. And that's not it. And that ain't it either. That sure shit ain't it. So basically, when this closed blue inside that, it doesn't create this. Right? It doesn't create that. It has to be yellow. Now, if it doesn't create that, it can't get out of there. So you need to create a border to a range if you're going to escape a range. So that's a sign that it ain't going up from that point. As is this up here. There's no test of this candle at the top here. Even at a lower time frame, there's no wick coming up into here. So there's right from this point right here, the price is breaking down. Although you would sort of expect it to jump up to retest this trend at some point, but it'll be sort of like probably a bit more of a scammy type up and pump or something. Down she goes. So yeah, you lost your range trend, so you lost your range. So these are great things for taking longs and shorts on, breakouts. Especially if it's been holding it for a really long time. And especially if it hasn't created anything of the same sort of time frame. So like if you get a 1, a 2, a 1, and then you just get ones and ones and ones and ones the whole way up this, if it loses it, it just dumps. It comes all the way back down to that bottom range because there's nothing big enough on the way up to support it. So that was lost.
Would we have entered a short when we closed that blue candle outside of the range?
Yeah. Well, no, not really. You would have entered a long. You would have longed this.
Okay.
Yeah, you would have longed that. And you would have longed that. And if you were trying to short it, it'd be this candle.
Yeah,
this one. Yeah. Because nothing's going to turn that around. It's now lost this and this. It's lost all of that. So this is a higher time frame range than this one, so you would have waited for that. So yeah, you would have longed. Would have come back here, closed there, you would have shorted. And that would have been history from that point. And the thing about this stuff is now you got to look all the way back over here and go, well, what's going to hold it up now? And that's where you've got to look back in here to find the thing that can support the price in some time frame.
So you look for your previous levels on the same like general range. You don't bother with the stuff on the top. Like all that price action over up there.
Well, it's nothing in here can really support it because you've got this blue wick closed inside this blue candle. So this was a different range in a different time. That was that, and that's dead now. Like you'll probably find that when you lost that, see, supported the price for quite a while, but once it started to break down, you got some pretty big dips when you dropped underneath that. And that was. So that range is dead and buried. So then you look down inside here and you go, well, what else is there? And nothing. And this one, which is hit by all this. This candle, which is again hit by all that. So back over here. What about this one? No, it's been hit over here. Let's look at this one. This this is not being touched. This hasn't done anything yet. It qualifies. The ones behind it don't. That doesn't. That doesn't. Plus, it's not going to go past there anyway. It has to do this one before it could, say, come down to this one. So, so that would be, I mean, a completely layman's way of finding where price is going to go, but that's, you've broken out of that 4-hour range, and there you go. That's what's going to hold it up. Yeah, so hold level in this case would be that one, yeah, which nothing's hit yet. In this range, it'd be that one. Yeah. So the price is already hasn't even come down. Like, hasn't even come down. So therefore, that didn't have a chance to hold the price down because the price never closed under the hold level. You know, this is going to hold it up, but that's not what's holding it up. It's this. So it's the backside of the range. So once price starts to get held up by the second candle up, you know, then that's when, you know, you can see, okay, this is starting to get kind of bullish. So you've now re-entered this candle over here. So there'll be some kind of range trend you can create of this one, like that. And then, yeah, does it continue to hold that? Well, yeah, it does. And that's where we are now. So as you can see, there's a blue candle there, and in 3 hours and 18 minutes, that might close. So you can probably take a guess what happens if that happens. We do have that, which is being created. So what you'll start to see when trend is rolling over is, you know, this one here gets flatter by the creation of this one, and then, you know, if you get another couple of candles, and then you've already sort of got this at a lower time frame, which 4 hours, so 1 hour. There, there. Yeah, so that was a good entry point for a long on the reverse of that retest, and also the creation of that. So you had two things. We could hold that up. You've got that. Okay, so that's holding it down. So yeah, if we open and close another blue 1 hour candle under this, then we start to lose this range up in here. And then we just need a 4 hour under here, and then it will probably just start to follow this trend down for another couple of bounces, which will be the retrace that is coming at some point.
Sinda, wait, sorry. This recent trend line you drew between the two yellow candles, why don't we adjust it even though there are yellow candles closing above it?
Because it's a range trend.
Okay, yeah. So
range trends in the air.
Okay.
They don't adjust.
Got it.
So normal trends do. So that's where, like, you know,
all right,
blue to blue, like blue to blue, like that. That's a normal trend. And these can be refined by time frame. They can be arrayed to the next one and the next one, etc. And yeah, so that, like, normal trends, they move and you can adjust them with time and stuff. Range trends are just the outer boundaries of a range, which in this case it's trying to recover it, trying to get back in, but then it hits it hits whatever hold level that is at some lower time frame. So Yeah, it's actually the backside. So it's hit the backside of the 30-minute range, and that's rejected the price down. So that's yeah. So that's starting to reverse. What you got here? Yeah, and that's sort of kind of keeping it in place at the moment. It hasn't used this down here yet, so the time frames will just get smaller and smaller and smaller until eventually it just runs out of things to hold it up, and at that point it'll just collapse. By that point, a larger candle, like higher time frame candle, will have formed in the opposite direction, and down it goes. So the tradable things are basically like hold levels that you can take trade on that. So 32 back to 31. Creation of range trends. So once the price comes back up into here and closes yellow, it'll create, if it does, it'll create some kind of trend. And that's sometimes that's a safer way too, just to wait for the entry. Like if you just, instead of just shorting that, wait for this to close, because it might close up there. Could be a big yellow candle, come all the way up to here as an example, and then your short will actually start here and come down to here. So that's, yeah, sometimes it's better to wait. Like on a very, very small scale, you can sort of see how that has been happening along here. Like if you just shorted the hold level, short the hold level, short the hold level, went up really high, short. So that's all of it's through there. And if you'd longed this one, which is lower time frame because just that one candle, but if you'd longed it, as you can see, that's your actual rough trend. Like I say, you'd have to break this down and find the proper time frame range, but you long this trend line and TP when you hit the backside of the range there. That's yeah. And once you hit a break level, like that, here's an example. So you're going to get two things that are going to happen when you hit a break level. You get a lot of break levels in here, right? So you got one there, one there. You got something here at a different time frame. So let's just stay with this one as an example. So clear, obvious 30-minute range. Hit the break level here. That's your trend. And this is what basically creates an origin level. So you get a break level, hits it, goes along, loses the trend, comes back up, touches again, done. So everything up until this candle, that was just a break level. Once this candle closed, that was an origin level. Next touch of an origin level, bigger motion. So that's
when does it upgrade to an origin level again, like specifically? Because I don't get it right now.
This candle. So it's when it breaks its support trend. So what you do is you find the first touch of the break level, which in this case is this candle, and then you look for whatever the support trend is in that moment, which could have been that one, but then it creates this. So it's quite local. So you just go, okay, well, it only has to break a local trend. So you've got that very local support trend, and then this candle here breaks it, and that's what upgrades that. So that level is now going to reject harder. Down it goes. So that's the same thing. Yeah, happens on the bottom side. That? Yeah, that's one.
So the first touch will always be reject for an origin level? The first touch is always a reject for the origin level?
Well, all support. Like, it's either going to reject or support. So this would have been there to there, and then there to there. Yeah. So this 2 candle range here, that's your break level.
Mm-hmm.
There's your first touch. There was a trend in place. That trend became this trend. That broke the trend. This was your long, and that was your origin level reaction. Way up there. So that break level, this was roughly like this. That was sort of like that. And then that came off there to there. So touch your break level, break of your interior trend, long. That trend there didn't have a hope at that
So the
point.
candle that is closed after the break of the trend determines as long or short?
Yeah. Well, it's more a case of the side of the break level. Like this, the break level's on the bottom. So when you think about what a break level on the bottom should do, it should allow the price to break down. But there was no blue candle hard closing under this. It never actually broke the break level. It went under it, but it stayed yellow, got back up above it, was on it, had already broken the trend by that point, so this thing was upgraded. So this, whereas this should have represented the breaking down of the range, it now represents the breaking or support. So that price became support. So that's, and then after it retouched it, you get a decent sized move. So yeah, so you have one on the bottom here which created that decent pump up, and you've got one on the top here which created that decent rejection down. On the lower time frame, you'll find these a lot all over the place. You don't find too many of them on the higher time frames. Kind of way this is. It's just not. It's BTC. It's BTC. Yeah, it's way this. Take a guess at what this could do. See that?
I'm on 0 sleep, brother. I can't.
Okay. Yeah. So weekly downtrend, weekly break level, hit of the break level. We're up over the trend. What do you reckon happens if this thing closes yellow? If you get the opportunity at that point to long this, you long this. Yeah, because that'll go up. That'll go up. That's a weekly one, so that'll be pretty decent.
Your entry would be at the 76 level.
Yeah, yeah, be waiting for a pullback to there.
Okay.
Which, I mean, there's other reasons why it could just go up anyway. Like it just off its own steam, it could go up to there if that candle closes yellow just by itself and hit the break level on the other side, and then that becomes your range, like that, because that'll reject. So yeah, and if that rejects, it's got to be held either there into the future here. But if this closes yellow, it'll shoot up to that. It should shoot up to that. If that rejects, which it should do, then it will come back to a hold level, which is down here. If the hold level doesn't hold, it'll come back down here to try and hit this break level, but it won't hit that break level because it's going to run into this thing, and this thing's going to send it. So yeah, that's kind of what could happen on BTC in the next couple of weeks if everything closes the way that it might. Then the bears will cry. Yeah, so that's our Sol 1 day. So we had a range over here, came up into the hold level, closed, created a reverse trend, shorted the reverse trend. That was the 134 entry-ish on the short. And down here, got a lower range, came up inside, created it, created your range trend, went through your range trend, haven't retested it yet. Right, so this is kind of all part of why it probably will retrace, because you got a normal daily trend inside here. But the first daily range can only be created if we close inside there. So see, that's 119. And we've got this hold level rejection over here back down to 120.827. If we lose this interior trend, normal interior trend, then we should travel to the exterior. So that's again all sort of the same kind of area. So yeah, if this loses that, and if that does its job, and if you get a retest of that, and if it wants to create a proper daily range, it should go there. It's got to find something to hold it up on the rejection of this. So yeah, there's a few reasons why it'll probably come back down there at some point. Maybe today, maybe tomorrow. It'd be better if it did it today, because then it could create two blue candles and another range that could be broken out of at some point. But yeah, who knows? They might just push it down right near the end of the day. We've got 3 hours to go. Well, they might not. Yeah. Just leave it as lower time frame stuff up in there. Yeah. And this might get in the way of it. You've got this candle in here, which is capable of sending price up to about 137. So not a hard closed candle, and it can't be, not for another 6 days. So there's always a bit of inherent risk trying to just long this, but 137.6 is basically its target, which is within the break of the range of this. So that's not an unachievable target. And as you can see, we created that, also part of that rejection. So we created a daily and we created a weekly on the same time. So we basically broke two, created two. I think it was this one. Yeah, so if you look at that, the daily and your weekly rejections off here. Coming back down again. Funny thing about when you look at different time trends on the wrong time frames, doesn't look like it touched. And where it was made. There it is. So if it had taken a couple more days to get to this line, you'd just be slowly raising your entry of your short, up as it goes. It never touched that, so it can't break out of that range, and it never touched that, so it can't create another top to break out of that. So at this stage, it's making all the right moves to have a retracement. It's just a case of whether it does some kind of out of the blue bounce off 124.7 or whether it goes deeper down and targets something down here, which is way more likely that it goes down here just because of these other factors that we've just mentioned, like no retest of this. So it makes more sense to go below that down to here. So we're at 117. So what's we got? 117 would be $473 million worth of SOL leverage taken out. So sounds like a pretty good place to go. If it does that, then you'd utilize that move back to 125 from wherever it goes to inside here would be a safe bet, just in case that weekly doesn't fire. But if maybe TP half of it, and then run the other half up to 137 if it does, or if it doesn't, then just get stopped. Let's see if there's an example around here of a non-hard closed. That's a non-hard closed candle. So you can see it. And this is a wee bit different because it had this huge run up, so chances are it was going to fail anyway, but it's had this huge run up, it engulfs the candle. You're thinking Moon Boy, it's going to go to 226, but it never really got up here, it never hard closed it, never came back and went up again. And this is sort of, yeah, markets move like that. They move like, yeah, So, this the weekly that we've just engulfed could do something like this and dump down. Versus, say, this one. Price entered it, price shot up to target. But structurally very different. Engulfed, new range created, hard closed above, down and up to target. That's very different than that. So this is a bit early to tell, but yeah, if this but if we go into the daily looks a lot better. And there'll be a 12-hour in there somewhere down here. Another one there.